Hey, welcome everyone. It's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, let me know that you can. I would greatly appreciate it. No, Jim, not today. Morning, Helen. Hey, Alex. Brooke, good morning. Two is the opposite of one. Right. There you go, Jeff. Afternoon, Kevin. Yeah, I appreciate it, Andrew. Thank you, thank you, thank you. So, welcome everybody to this amazing trading day. We'll get into that. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So today's agenda, we've got our followers page. We're going to get into today's trades, economic reports, a review of the market, which I think will be a little bit of time in there, upcoming trainings, weekly trading topic, and then your stocks in review. All right, so followers page is right here. Guys, everything that we put out week in and week out is right on this page. You'll find it on YouTube, on Facebook, on TikTok, on Instagram. We've got tons of content that goes out every week, so make sure you're following along to keep up. All right, so let's jump into today's trades. So what trades did you do today? And I don't really care if they were actually today. It could be within the last couple of days. You may have a trade that you've got opened from a couple of days ago. But what trades have you done? Drop them in. And let's go ahead and check those out. Let's see. I want to open up a tracking page here. So I have nothing, for me, nothing today. And when you look at the S&P 500, if you haven't seen it already, that was pretty clear as to the why. And even to the point that I heard on one news channel that CNBC gave some information out that was incorrect. They said that Trump was going to postpone all tariffs for 30 days, and the Dow just shot up. It freaking took off, right? And it was like, oops, no, that really wasn't true. And then we went from 1,000 up to 200 and jingle down. So it's been a crazy day today. Crazy day. There you go. Patty said SPY1 contract $151. Dennis said small gain for the day. Alex said, let me see something before Alex. Hold on, there's a couple of them there. Before that, Trip said nice scalp on Roku for 25% this morning. Nice. MNQ sell for a nice profit today. Good job, Brooke. Dennis already had a trade. Okay. So Alex had a longer comment here. So I've had over 30 switchbacks and a dozen or so zero line breakouts on my watch list almost every day. In the past week, and nearly everything gaps and immediately goes out the window. Hardly any ideal, clear and concise setups. The zero line breakouts just blow through or even gap through. Exactly, and that's the market. And that these trade setups that you're referencing, Alex, are meant to do that, right? It's not meant to find good trades. It's meant to get rid of all the garbage, and the cream will rise to the top. Still, though, I had some great bearish swing trades this past week on SOX, ICLR, and TMO, and even a couple of bullish ones on BR and DG. Nothing open right now because I didn't find any patterns or setups I like. Sometimes the hardest thing to do is nothing. Bingo, folks. He nailed it. But I'm not taking my canoe out in this hurricane with the darn good reason. You're right. I did get off some decent scalps on Tesla, Broadcom, which is AVGO, and Meta earlier today. About a 10% return each. Alex, I mean, what could you ask for, right? I mean, that's perfect. It's absolutely perfect. Patty said things are expensive for sure. Trip said I bought an SPY put Wednesday right before the close and sold it Friday morning. The best trade of the year. There you go, baby. Um, and Alex congratulating everybody. Patty, Dennis, Trip, Brooke, everybody. So congrats to everybody. Where Patty said about things getting expensive, I went and looked this morning. I wasn't planning on placing a trade first thing this morning, which wasn't going to happen. Fear of vols, fear of the VIX, fear of misinformation. Oh, there's a rumor that when Trump is done talking to Netanyahu, they're going to have a press conference. If that comes out and you're in a bearish trade and Israel happens to say that they've pulled their tariffs from the U.S., I think you're going to see the floodgates open. Watched Maria Bartiromo earlier today And her explanation was all it will take is one European country, just one, to say, yes, we fixed this. We worked our way through it, and you're going to see the market explode. So that's her opinion, not mine per se. But first thing this morning, I looked and Amazon had a 20-cent bid-ask spread on the options. Google was a quarter. Tesla, Microsoft, 20 and 10 cents. The SPY was only a penny. The Qs were 9 cents. Coinbase, when I looked this morning, was $6. Then it changed to $1.50. Goldman held tight about $1.70. Home Depot about $3.50, which is high. AMD was at 15 cents, not bad. Chipotle, a $45, $50 stock at 95 cents, which was a lot. CrowdStrike at $3. Broadcom 50 cents. Meta 75. Nothing crazy there on those, but some of the numbers are off, and they're changing throughout the course of the day. That's just it. Alex said, I go through the entire monster market movers list every day for setups, and when the market opens the next day, all that homework feels wasted. I guess it's another day of scalping. Well, and that's what it is, Alex. It's just that. But even though setups turn into successful trade, it's worth it, and that's the point. If it does work out, if just one of those companies becomes a good trade, and that's all I'm looking for, is 1 or 2 trades. That's it. Trade with Rob definitely helps too. Thanks for that. Yeah, you're quite welcome. So, did it open up here? It did not. So thought I opened this file while we were chatting. Interesting. I had a problem the other day with Microsoft Excel where Microsoft just stopped opening up my files, and I don't know why. That's what it's doing now. It's not opening my tracking sheet for POP. Very interesting. Let's try this one and see if it lets me in there. All right, so I got the one contract trade. It won't give me the full sheet. I don't know why. But we look at last week, right? Which would be the 31st and on. I don't think we had any for 31. We did not. So 4-3, we were up. And this one contract, folks. This is just one contract on this. Okay. And if you look here, you see it shows one contract in this, on the top row. It shows one contract, right? Closed trades. We got in at 533. We did a bullish trade. We got out at 546 and a quarter. It's about $1,033 on that trade for one contract. We also did it as a 10 contract trade, which is a 10,000 and change, $10,300 on that trade. So awesome trade on United Healthcare. That was it for the week. I mean, if you look at our numbers, we've done extremely well until this last little bit, where we've slowed down in this last week. We've had very little. And every bit of that is positioning. What do I mean by that? As the market shifts, I'm going to go and grab a different color pen. Let's get red. As the market had been going up, and then we get this crashing down motion happening, and then you get a couple of decent bullish days in between. You get a few more bearish days. You get a little bit of a pop in there, and you're not getting any real good consistent move in there. And then you get a gap and go, a gap and go, a gap and go. There's where Alex said all the setups are disappearing. Exactly. You do the work, you find the candidates, the market gaps against you, which is not a normal thing. This is an abnormal market, right? It's not a normal thing, but because of this, we're not getting a lot of trades off. So keep something in mind when we look at candidates, right? I want you to consider this. Let's go and look at let's look at Coinbase. So based on bias, based on rank, so if we look at, as an example, if we look at this candle right here, we are in a bias of bearish neutral. I'm sorry, bearish at this point. That candle is bearish, right? And we've got a rank of 3. So there's really nothing exciting about it here. We're bearish here with a rank of 2, right? Well, when I am bearish with a rank of 3, right, that D3, the first one that I drew, I am sitting all the way back in my chair. I'm in an office chair. My chair is leaned back. I'm doing it right now. I am moved away from the desk and the microphone. My hands are behind my head, can't touch the keyboard, and I'm just watching. There's nothing exciting there with where we closed or got near closing price on that day or even opening price, right? The next day, day two, I might be sitting straight up in the air, straight up. That's position two in the chair, and then we run right into resistance. Well, I'm back in position two, nothing exciting, right? So this is position two. On this day, it's position three. There's nothing happening here. On this day right here, this is position one in the chair. Why? We got down and got near a key level. In this case, the 163 and jingle 36 level. We opened near there, and I'm looking, did we break, did we retest, and did we fail? All within the same day, right? On this day here, I'm in position one in the chair. Why? Because we're sitting right near a key level. We are in a bearish bias rank of 2. We're right at a key level there. Are we going to roll over? Are we going to bounce? It's a switchback trade. I've got room in both directions. Where can we go? Right? So when you look at the importance of identifying the candidates and what you're doing, right? You cannot find a trade every day. I've told this a million times before. As a brand new trader back in 1997, my only opportunity to trade every single day of the week was 12 to 12 p.m. Eastern time. The worst time of the day, it's lunchtime, right? The worst time of the day. That was it. I'd sit down with my sandwich. I had a half hour for lunch. I was in my private office, door locked. No one could come in. I had this funky black and white tablet laptop-ish thing that I paid a couple $100 a month for to get access to the market. And I'd watch and look for trades. Well, then it'd get to be about 12:25 and no trade came. So like, man, I only got 5 minutes left. I'm wasting my day here. I got to find something. And I would place a trade, usually the wrong one, usually the wrong trade. It was just something to do. I hit enter. Ooh, good, I'm in. So, big deal, right? You're in. What's the purpose of it? It was the wrong trade. Don't be so quick to rush into a bad trade just to put on a trade. This is all about allowing the cream to rise to the top. Get rid of the garbage or the chaff or whatever. Just get rid of the junk, right? And just let the cream rise to the top. And that's all you want to trade. Stop chasing after these mediocre trades. You should be at a point right now, and I just went through this conversation in our mastermind group. We're doing a core training right now in our mastermind group on day trading, actually. I wrap it up tomorrow evening is our final session. I think we'll have somewhere about 7 or 8 hours worth of training on day trading in there. And in the training, we talked about candidates, and I asked how many candidates are people trading, right? And one person said 5, another one said 6, 10, 8, 15, 20, 30, 100, whatever the numbers were, right? But as small as 5 or 6, and as high as probably about 40, 45, something like that. Okay. And you can have as few as you want on your list. My recommendation is your list consists of nothing less than 15 and a high of 20 or 30. All right. But 15 is really the low end of what you want to have. Why? If you have 5 companies, you could easily find it where you have no opportunities today at all in just 5. Well, but I scour for other companies, and you can. You can. Nothing wrong with that. But if you can get really good at a core group of candidates and then scour for others also, that would be a better choice, right? You're looking at the list on the left side of my screen right here. You can see it says RR Pop right here. Oh, well, the blue line went through, but this list, that's my 20 stocks. Day in and day out, those are the ones that I look to. They're my go-to. And I'll find 2 or 3 potentials every day. Every day. Now, found them last night, but they didn't come to fruition today with the move we had. Okay. Dennis said, do you recommend that all your candidates be from different market sectors? They don't have to be, Dennis. Again, if you look at mine, I'm very heavy tech. Why? Because I like tech. I like the fast movement of it. I like the quicker profit potential, which also brings quicker cost or loss potential, right? But I'm a big fan of tech stocks. So, and do we kind of cross over a little bit? We've got Coinbase and we've got XYZ. They're the exact same sector. Exact same sector. Well, maybe not sector, but they're definitely in the same they're in the same sector. That maybe not the same subsector, but they're in the same sector. They're crypto related, right? Costco is retail. All right. Some would say that some of the tech companies are retail, like an Amazon, and they are as well. But I don't consider Costco and Amazon to have anything to do with each other. Right. So Tesla is my only car, electric car company, but plenty of tech between Meta and Netflix, Nvidia, CrowdStrike, Amazon, Adobe. I mean, there's a lot out there. So you can break it up. What I would do is avoid being sector specific. Unless you are, I'll pick an example, an oil guru. I mean, you just know your stuff when it comes to energy, right? And you want to go after energy stocks, by all means, you should. Because if you've got some insight to a particular sector where you've got that slight edge on everybody else. Remember, I did a training not long ago that basically said if you will spend 18 minutes a day, I think it is 18 minutes a day on any one topic, at the end of the year, you will know more than 95% of the people in the world about that topic, right? Well, that other 5%, that's the person that knows oil, energy. That's their gig. They're a housing guru. That's their gig, right? For them, you're not going to surpass them with your 18 minutes a day. All right. So there's always going to be someone that knows more, but it really just comes down to putting a plan together and let me see something. BlackRock CEO Fink, in the long run, this is more of a buying opportunity than selling opportunity. Oh, I couldn't agree more. My kids were over this weekend, and I'm like, listen, whatever you do, I'm telling you, start buying SPY. Start buying SPY. Add to your portfolio of your SPY. What if it goes down? Buy more. I said this at a meeting today. We are not going to wind up drinking vodka and eating borscht. Russia's not taking over the country. China's not taking over the country. Our stock market is not going to fail. It's not. Is it going down? Yeah. So what? It's okay. Yeah, banking. So, when you run into the issue, like Dennis then follow-up was, I have focused on mostly the banking sector. You can, but so Dennis, here, if I want to go to banking, let's see, BOA, right? I think it's BOA. No, BAC. Bank of America. Okay. So if I want to go to Bank of America, you'll see up on my Omega charts, it shows banks, diversified banks, and BAC. So what does that mean? Banks, these are the various sectors in the market. Banks is the one that Bank of America is part of. Diversified banks, that's their subsector. There's diversified banks, regional banks. I don't know what TMF one is. And then there's the symbols. These are the stocks that are similar to the same subsector, which is diversified banks, as Bank of America. So you could go here and pull these out. Now, if I were going to do that, I would definitely be focused on the bigger companies, the Bank of America, the Citigroup, the ones that have. Would I go with Canadian Imperial? I'm not saying there's anything wrong with them, but they're not the market mover at all. They're not, right? The Citigroup, yes, moved without a question, right? Barclays, big company, right? So you find the bigger ones in there. But if you're in a bunch of banking stocks and news comes out on the banking sector, that's why you really want to be a guru to sector trade, meaning I'm just trading this particular or these 2 or 3 or 5 sectors. If news comes out on one of the stocks, a major stock in this sector, it could mess up every trade that is out there, even though earnings, as an example. If Bank of America has bad earnings, the estimate is all banks are going to have bad earnings. So your bullish trade gets, a hatchet job because you just happen to be in the wrong place at the wrong time. Let's see. Your lunch trade, you were not following your system on that show and the jokes on you. I'm not sure what company you're referring to there, Jim. Let me know. Alex said, what was the false tariff news you mentioned earlier? So that what I had heard from another news channel, guys, so that's just it. I heard it on Fox News that CNBC had come out and said that Trump was going to suspend all tariffs to all nations for 30 days or 90 days. I forget what it was. And they said that's what drove the market up. And then the president, they said, came out and reported it as fake news, that he didn't say that. So, or the White House did. I don't know if it was the president, but the White House did. That no, President Trump did not say that. So, yeah, so there you go. All right, good. So when you're looking at the sectors, then Dennis, I would be very cautious on it, but that's how you'll find it. Go into the Bank of America, and I can click on Citigroup and go, "Ooh, I like Citigroup's chart. We could trade that one." Right? Okay. Bueno. Let's go back in and let's go take a look at economic reports. We're going to go over to Forex Factory. We're going to hit more. So we have nothing, President Trump speaks today tentative, right? I'm telling you, they just need to put that on the put that on the schedule for every day, because there's a chance he's going to speak every single day. We have no idea. It happens all the time. He just jumps out there. But yep, he's speaking today. Orange. That orange could become like a triple diamond black mountain hill for skiing. That could become the roughest terrain in the world, or this could become flat water where you can and it's only 2 inches deep and you can run across it, right? It can be real easy. It all depends on what gets announced. If an announcement comes out, that I want to be careful not to give too much away at this point until we get to that section. But if an announcement comes out that they're negotiating on tariffs and this country agreed to this, I think you'll see some easement. And especially if it's a major country, even more. And I don't know if you saw before, we put tariffs on China. China came back and said, we're putting a 34% tariff on the US. Go figure, they picked the Fibonacci number. And Trump said, if you do that, we're going to put a 50% tariff on you. And the belief is, guys, I'm not advocating for higher prices at all. But the belief is by some economists of, yes, we're going to see some short-term pain. There's not going to be a question. They're going to see some short-term pain. There will be some things you can't get your hands on. But if you're a business that's been trying to ship, U.S. meat to Japan, and Japan has like 100% tariff on it, and nobody wants to buy it because they can get theirs for less price, then U.S. meat manufacturers can't sell that. And that's done on purpose, right? That's not fair. Those types of things need to be fixed. Was this very much a tear off the Band-Aid? Yep, sure was. Absolutely was. And again, I'm not here to debate with you of whether or not they were right or wrong. You'll make the decision whether you think they were right or wrong. Actually, the market will make the decision over the next couple of weeks, whether they feel it was right or wrong. Nothing really tomorrow. 2:00 meeting on Tuesday. That is a market is open type meeting. So you're going to see lighter volume potentially earlier in the day. And I say potentially because the tariffs could still drive volume. The next day on Thursday, they're all 8:30 a.m. meetings, so I am less concerned with those because unless you're trading futures, the E-minis, because the news is going to come out before the market. On Friday, we've got an 8:30 here, but then we have two 10 o'clock reports, all red. Everything on this page is all red today, right? So a lot of opportunities this week. Just again, be careful on ones that are open during the market hours. Let's see. Philip said, did it seem to you that it was time for this type of drop to happen? The market has been doing nothing but going up for the past several years. It needed a catalyst to finally correct down, and this was it. Like a mob war, it was time. Yeah, and so the average bull market lasts 7 to 8 years. The average bear market lasts 9 months. So we're not in a bear market. Well, we might be after today. We'll see. Well, okay. Bear market takes a long time to really decipher. It's 3 consecutive reports of these numbers coming out and blah, blah, blah. Right? When I look at it, I just talk you got a 10% correction and you got a 10% pullback or correction, and the 20% would be the considered bearish market, right? We definitely hit bearish market in 2 markets, and I'll share those with you in just a moment. And then the other 2, we did not. Actually, the Dow, we've done amazing. Before today, these are pre-today numbers. I don't have them with today. We can enter today's numbers in. I just don't know what they are. I've got them on a spreadsheet. So overall, we've got some stuff happening this week, so just keep your eye on it. Yeah, there you go, Alex. I bet Tony's having a field day. You're right. I bet he is. Why would the minutes be a surprise? It's just whatever what you're looking for in there, Brian, is what did they say at that meeting? The minutes of that meeting, did Powell come out and change something inside? If you notice, it's red. There's a reason for the red, right? Did Powell say something inside of their meeting that changes where they think the market's going to go? Right? We were dovish, but now we're not. We were bearish, but now we're not. We didn't think there was going to be a recession, and now we do. Right? We thought there was going to be a recession, and now we don't. Right? Or now we're unsure. It's changes in positioning that we're looking for. It's slight words, and that's all it is. It's not. We're not expecting them to say, "Hey, we're going to drop rates from 6% to 3% within the next month." That's not what is expected in there. All right. Is today a resting day in the market? Well, with the move we made, Dennis, with the move we made there on the S&P today, I don't know about resting. We hit the 20% correction line today, right? Or bearish territory, right? We didn't close below it, but we did break through it with a vengeance, okay? Another gap down to here. We ran through the 20% correction. We broke through the next fib line, which I think is the 809. Oh, wrong one. Oh, it's a -1. My bad. It's a -1. All right, so we broke through that. So it's 100%. So this move here, this bearish move that took place on the Dow, on the S&P, sorry, we've now matched that same distance, whatever that was, whatever this distance in here was, whatever that is, we've now duplicated or matched that in here. Okay, down to that one line. Yeah, Jim said there have been FOMC meeting minutes read that have moved the markets in the past. And that's it. And the bigger fear is because of what's going on right now. Because of all of the problems with, are we going to see a recession? And look, people are petrified right now. Petrified of what's going on right now. I see it. I see it in a number of individuals that new customers that we get as a company. I see it in the number of customers that buy our lower cost items as a company goes down when these uncertainties in the market hit, right? And what I'll see is when the market is just roaring and amazing, that is when the biggest number of purchases come in. Why? Because people look at it and go, oh, the market's doing great. I should jump in. Oh, I could have had a V8, right? No, I'm not saying it's a bad time, but you should have jumped in well before that, right? It's already gone so far that it's tough now to come back and go, well, I should jump in now, right? Who was it? Brian had said it about, maybe not Brian, sorry, but I'm mixing up who it was, but for the last couple of years, the question that came up is, and I apologize for the mess, but you go back to, a good jump off point right here of 23. It was November of 23, October of 23, whatever it is. From there, I mean, we were at 4,100 on the S&P. We ran up to 6,200. That's a 50% increase. And then we've pulled back now to 5,000. Right. So that pullback to say, is this the right time? Guys, I am not normally one, as an investor, I am not one that is jumping in for the sake of, let's just throw money at it now and see how it works. Now, with that being said, I do believe there are things that you can do that with. SPY, QQQ. If you're a small cap trader, then the RUT, right? If you are big blue, then you could trade on the diamonds. I'm all good with all of that. Every bit of it, okay? Excuse me. We are in a position right now that every single line of news will drive the market. Do this. Give me a 1 for yes. Don't give me a 2. Give me a 1 for yes. If you can remember when Alan Greenspan was the Fed chair, give me a 1 for yes. Don't worry about no's. Just give me the one for yes. I want to see about what percentage of you. Quite a few. Quite a few of you. So do any of you remember, and you could type the word in yes for this one. Quite a few of you. This is excellent. Good. Do any of you remember the briefcase effect? Just type in the word yes or Y is okay. Good, good. All right, still a decent amount. Okay. Briefcase effect basically said they would, when we're going through all of this housing debacle and all this garbage, they would look at the size of his briefcase when he's walking to the meetings on Capitol Hill and make a determination of what was going to be said at the meeting, the congressional hearings, based on the size of his briefcase, right? Or you would have this amazing day would start off. The market would be down for the last 4 or 5 days. It bounced on some news, and a politician doesn't need to be a big one. A politician would come out. It could be Secretary of State. It could have been whomever, right? The energy secretary, someone like that comes out and talks. Doesn't matter what they said. The market came crashing back down, right? It's that fragile of a market. And we are back there again right now. We're in a massively fragile market condition right here and right now. And we're going to talk tariffs yet today. We haven't even done it. We're going to talk tariffs. We're going to talk about how to go about looking to consider trading them, right? So let me take us back over here. We looked at economic reports. Since we're at the S&P, let's look at what's going on market-wise. As I stated before, we have had a massive drop from where our all-time high was. This is not only our 52-week high, but it's our all-time high is right here in the S&P, okay? We had a nice move down, a pullback up, and a bounce, right? There is a Fibonacci drawn, and I'll give you exact dates, and it's all on the wicks, so you don't need to know what price, but you can see the price right here, 61.47.43. That is on February 19th. Is the high, and the low was on March 13th. So less than a month's time, less than 1 month's time, and we had that fib drawn on there, right? Sorry, I just wanted to shut my volume off. My phone is still blowing up from people with questions on the market. And then we got to bounce from there, right? So what we ideally want to do is you're going to take, let's do this. Let me scrunch this down just a little. I'm going to pull this out of the way just a little bit. All right, that's fine. Okay. We're going to grab a tool. It's an ABC tool, right? And it's listed on your charts, if you're having Omega charts, as Fibonacci extension. If you don't see it, come up to this gray bar, right-click on it, go find Drawing Tools. Drawing Tools will be the header. And then keep scrolling down. You'll see a bunch of Fibonacci tools. Mine will have a check mark next to it, right? I probably just missed it. Here we go. No, it's, what are we doing? Not the ABC, it's the extension. Yeah, so extension, I already have it up there. I have a check mark. I have 2 of them in there, okay? But it's Fib extension, so that's what you want to add. So I'm going to grab that tool, the Fib extension. I'm going to go off of the highest high where the Fib started. I'm going to go off of the lowest low where the Fib ended, and I'm going to go off of the highest high wick that we ran out before we rolled over. This one right here is 786.95. This one is 783, so it's this one here. Okay, so what I just did is I went from A to B, this retracement, and then becomes our C, and it added 3 lines in. It added a 236, it added a 618, and it added a 1. Right? That 1, and I did not show this last week. I had it on my notes to go through in the weekend update, the Traders Intelligence Report, Traders Market Intelligence Report, and I just spaced on it, so I didn't have it drawn on the chart. But this move takes this V top, that V bottom, the retracement up. This move here from A to B, or from 1 to 0, that's 100% of the move, right? So it extrapolates it out from C to what we would call D. If you'll notice, I have an ABCD tool over here. I'll show it to you in a moment. It's the same type of tool, just identifies it a little differently. So moving down to this one level, this move on Friday gave us a 100% pullback, which meant we're looking at that move was very powerful to move up, important. Now we had the pullback. Now today was just another bad news type day, right? It actually opened down here, ran down, bounced, came all the way up, pulled back, still a hollow candle. We're up on the day from where we opened, but we're still bearish from where we closed yesterday, Friday. So we have nothing here that's screaming at us saying it is time to take trades. Now, if you're an avid Apple investor and you are dollar cost average since you started buying Apple at $117 a share, and you say, all right, I think this is a place, if you look at a chart of Apple, and I think that there's a bounce coming in here or a support coming in here, I'm going to go and buy some and add to my position. I'm good with that. That's fine. You're a long-term Apple investor. If you're someone looking to buy some stock because you think this is a place that's going to bounce and you're going to try to make a quick sale on it, you could try that. But this is not the market to be guessing that it's going to go in your favor. This is not the market to bury your head in the sand and say, I am going to pretend like life is good and just hope it works out. Right? I've done that. They have very costly mistakes by just hoping and praying that the trade's going to work. So be very cautious on trying to take something like that, right? As far as a setup. Again, for me, when it comes to the Qs and the spiders and other things that I'm a long-term holder in, right? I am a big believer in adding to those positions, right? Look, do I believe for a second that NVIDIA is going out of business? No, I'm a big NVIDIA investor. Big NVIDIA investor. All right. I mean, not long ago, had you pre-split, of course, but had you invested X, you invested $100,000 in NVIDIA and it was worth $15 million 8 or 9 years later or something. It's been insane, the move. Now, do I expect those kind of moves? Nope. I don't see that happening again at all. Do I still expect it to move? But probably not the way that it has in the past. So will I consider adding to my position? Possibly. But SPY, QQQ, Berkshire Hathaway B shares, absolutely. Yep. I've never seen a fund manager like a Warren Buffett do what they do and truly feel sorrow when the market went against them and they lost money. If Buffett could have, he'd give everybody the money back. He doesn't own it. It's not his. It's stock. He can't do that. Right? So, but we have violated multiple fib lines on multiple stocks at this point, including the S&P 500. All right. So as we bring this back in, we're looking at that 48.62 is the next downside target. That was our 20% bear market, 49.18. Below there, we've got to go back and look at fibs that are from May of 24, that are almost a year old. And if we look at it from when we hit those levels, 49.23, ironically, that 49.23 lines up pretty closely with where the 20% correction was. 48.44 takes us just down below our 1, and our next line is 47.15. All the way down there. The important thing on today's market to understand is this. If you look at where we opened, middle of nowhere, right there. We stretched down to the -1, which is a fib line. We ran up to the -382, which is a fib line. And we closed just about the 100-point level, or in this case, it's 1,000, but a 5,000-point level, okay? Our overall move, what kind of move is this? Guys, how much of a move is this? From here, let me take it off. If you know, you know. If you know what I'm talking about, you know it right away. From this line to this line, how much of a move is it? Yes. Good. Andres, good. Kevin, good. Jim, good. Starts with the number 2. It is a 2 standard deviation move. Right, 2 fib lines, Patty, which is a 2 standard deviation move. 2 standard deviation move is approximately 95% of all data points comes within a 2 standard deviation move. And we just saw that bore out today, right? But we are consistently using our fib lines over and over and over again, successfully. We got down, opened just below this one. If you look at Friday, boom, 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 great fail, test, drop, 5107 is support, 5112, 1415 is going to be a target. I mean, there's so much great setups on these. So much. But you've got to be careful. You got to look at things like the VIX. Right? This was Friday. This gap up is today. It has been a long time since we rocked in the moonlight. No, it's been a long time since we've been this high. Right? You got to go back to August 5th of last year for that kind of height. And if you take that one day anomaly out, you got to go all the way back to 2020. Amelia said, day trade vertical credit spreads. There you go. There you go. That'll do it. All right. Let me bring this back current. So caution grasshopper is what I would say to you. Alex said, what happened on August 5th last year? Dude, I don't remember anymore, Alex, what drove it up at that point. I don't. Not really sure. It could have been one bad tick that's in there. One person getting ripped off somewhere. I don't know. Don't remember what it was. All right. Let's go back in to our presentation. Oh, so coming up, guys, what do we got? You've got check-in is this evening for our Inner Circle. Our quarterly training is the 25th and 6th of April. That is 4 hours each day, Friday and Saturday. Mastermind group tonight, I will be wrapping up the day trading pattern, the day trading rules this evening. Trading You is on the 7th. That is also this evening. And then Mastering the Trade is next week. Power Hour Trading Coaches Playbook are on regular schedule. The joke's on you. I got 3 of them left, guys, including tomorrow afternoon, at 12 p.m. The other ones I have are at 8. Please, if you can get to one that is not on the 15th, you should, because there is a possibility I'm canceling that last one. I only put a 4th one in case we need it. I'm only letting it get to a certain level. Once enough people have gone through the training, I'm canceling it. Andrew just dropped a link in, so you can click on that and get to the joke's on you. Power Hour Trading Coaches Playbook, E-mini Think Tank are all on the regular schedule. Trip said August was the yen carry trade unwinding. Okay, that was it. There you go, Alex. It was the carry trade, where you go over and you take money from one country where you could borrow it at 1%. You bring it to another country where they're paying 4%, and you put the money there, and you're collecting money for nothing. Pay the 1, collect 4, you got 3% profit. Jim said I have BBs on my chart. The 5-minute SPX chart is showing BB squeeze going on, a Bollinger squeeze going on now. Good chance SPX will either go up or down today before it closes. Doubt the daily candle will look like a doji. Yeah, and again, how much of that relates back? I keep looking over my shoulder to see if Trump's speaking behind me. I would guess if he was, you guys would tell me. Stocks whipsaw in volatile trading. Session lows today, Dow down 4.4%. Session highs, Dow up 2.3%. That's a 6.7% difference. Is that right? No, it's 4%, 6%. Yeah, about 6% difference. Yeah, Chip said the 5-minute chart for the SPX is a big triangle as well. Yeah, I know, Brenda. Sorry about that. Okay, keep going here. Joke's on you. Weekly training topic. When will the S&P find the bottom? This was pre-tariff announcements for this. So we didn't have all this craziness happening when we first started talking about this topic for today. But it definitely made sense. So I've already thrown a lot of things out about tariffs, but here's what I'm looking at, folks. Let me try to summarize what we've already gone. If you are looking for a quick hit, I would be looking at a day trade. I would not be looking to hold overnight. That's number one. Number two is I would not be doing it on stock. I would be doing it with options. Put less in the trade, have less at risk. You're going to be out of it at the end of the day. Do not allow a trade to turn into an investment. You bought a stock, you thought it was going to go up, it went down a little bit, you held on to it, it went down tomorrow. Well, if it just gets back to where it was, I'll sell it. It goes back down again, it goes down again, it goes down again. Now you got a stock you bought at 60 that's at 42 and you just can't sell it. Right, Trump. Right, Chip. Trump's going to speak with Netanyahu. Do you know what time? I haven't heard anything on timing yet. Let's see. No, okay. They're showing news on CNBC. Nothing there though. So yeah, sometime this afternoon, exactly. So we're going to see it happen today. It's a matter of does he do it during the market? If he's trying to drive market up and it's good news, if it's good news, he'll probably say he'll try to get it done during the market open. If it's not good news, he'll probably try to get it done after the market close, which we're still going to see the whipsaw, but it's going to happen in overseas markets. You know, as the some of the other markets are wrapping up, or some of the Asian markets and Australian markets open up. You know, at 8 o'clock tonight, 7 o'clock, whatever it is. So if I'm looking at as an investor, if I'm looking as an investor and I have a position that I want to add to my position, I do not believe you buy low and sell high. I don't. I don't believe that is a model that most people can sustainably win at. Rob, I've always tried to buy low and sell high. I don't mean you don't buy it at a lower price than you sell it for. That's not what I'm referencing. Right? I have a very good friend of mine. His name is Steve. And I was teaching an event one time, and he and I would get on the phone, and we were talking about some trades. There was another speaker with me, and I had the other speaker up on the teaching at that point. And we're talking, going back and forth, and we got into the conversation of, no, but you should have waited to buy it for a better price, or you bought it too high, you want to buy it lower. And I said, wait, let's back up a second. Is your goal to get the lowest possible price you can? He said, yes. I said, mine is not. You realize that things happen at key levels, right? If you have a key level, if at 5,000 on the S&P, we would have bounced at 5,000, there would be something called a volatility flip. You would have been in puts, and those puts would have cost you, here, let's reference it this way. Let me get a pen. Oh, you know what? Let's do this. Let's first bring this in a little bit. Let's unscrunch it. In case it is. Okay. All right. And then we'll get rid of that, and we'll grab this. Okay. So let's say that for whatever the reason, on this day, you bought puts, and let's not even say it. Let's say you did it today, right? We gap down. Here's our open, right? And you bought a put. And let's say you bought the put for $11. Right? By the time you got down here, half hour, 45 minutes later, that $11 put was 18 bucks. Right? It was $18 put at that point. If we start to bounce, and let's say and that happened at the 5,000 level, or off of a key level, maybe off of that one line, and we start to bounce off of there, and the stock climbs back up and gets back up just to where we got in, which is when the option cost us 11 bucks. That option at this point may only be worth $8. No. It can't be worth 8. We got back to the same place we were. It was worth 11. How possibly is it only worth 8 now? It's a volatility flip. The market maker, when you get to that key level and they see support going to the other direction, they are flipping volatility from the puts to the calls. They're sucking it out of the puts and they're dumping it in the call. So all of a sudden you're looking at a call option that was trading for $7, and now you realize if you want to buy it 5 seconds later, it's $11, $9, $10, whatever the numbers are, it doesn't matter. It's more. It's more. And that's a volatility flip. And that is a regular occurrence in the market at key level, right? So for me, instead of saying, and with Steve, as he talked about always trying to buy the lowest low he has, we're talking about, this was probably 2010, let's say, right? 15 years ago. At that point in my trading career, I think there was one time I'd ever bought at the lowest low and sold at the highest high. Here we are 15 years later, and I think there's only been one time ever that I bought at the lowest low and sold at the highest high. I'm not about that. I'm not trying to do that. There's an expression, don't glean the fields. Leave some fruit on the vine to make it attractive for the next group of travelers that come through, right? Leave some money on the trade so everybody's not selling all at once saying, yeah, this is too good, I just got to get out now. Go. And you come crashing the position down. Okay? So I'm looking at this saying, if I'm an investor and I find what I deem to be a decent support, today I do not see support yet. Why? Because you are trying to catch a falling freaking piano from the 100th floor on a New York City skyrise apartment building. You're walking down the street, you see the thing dropping, and you go, all right, let me go ahead and stand up and support myself underneath there and catch it. Hell no. Step out of the way, let it break on the floor, look for a nice ivory key and say it's a souvenir. Call it a day, right? Let the stock come in and find some support. What does that mean? Well, we make a move down, right? We bounce up a little bit, move down. Move up. See what I'm talking? Now we got a base forming in there. And when a candle now shows me a bounce and a support in there, I will throw some money at it. But I will not, if my entire allotment, I'm going to make a number up. If my entire allotment that I want to add to my position would be $10,000, and again, I'm making it up, right? I would break that up into 4 or 5 different trades. So my goal is a maximum of $10,000. Doesn't mean I have to spend the whole 10 grand. Meaning right now, I might throw $2,000 at this. When I say right now, not yet, we get a bounce. Right now we get a bounce, right? We start to break out a bit of the recent highs. I'll go ahead and put 2 grand into the trade and then sit back in position 1 in the chair. If we continue to run and I see that we make a move up, come back to that 5,000 point level and we bounce, right? It's time to add another 20% or another $2,000 back to this trade, right? If I were wrong and the stock just drops from here, okay, what am I waiting for? I'm back in position 1 in the chair. I'm waiting for the stock to drop, find a key level of support, bounce. I'll look to take the trade. I'll put my second $2,000 on there. If it doesn't work, I want to own the stock anyway. It's long term. I'm not worried about it there, right? For me, it's you're buying into that dip. You know, the Wall Street brokers back in 2008 that said if you loved Cisco at 60, if you liked Cisco at 60, you're going to love it at 40. If you liked it at 60 and you loved it at 40, man, you're really going to love it at 35. They weren't wrong, except that they had no idea what they were doing. This was just their way of saying, please go back up, please go back up, please go back up, so they didn't have to answer the questions any longer. Because in 2008, when the market crash hit, less than 10% of brokers had ever seen a bear market. Less than 10%. And when it comes to traders, most have no idea how to trade it because most have never really traded the bear market. Goes against everything we're taught about being bullish. We want everybody to succeed. We want the market to go up, right? Yes, we do, but it doesn't work that way. This is called life, right? It doesn't happen like that. All right. So caution in your trades. When is it going to bottom out? Guys, I don't see a bottom yet until I see this happen and we start to bounce. And realistically, until we get above our highest moving average, we're not back in bullish territory yet. So this is all speculative inside of here. And that's how you have to treat it. It's all speculative. All right. But I did want to show that down below this, we do not have another fib line in there. So what we're going to do is we're going to add in a negative 1.618. And we're going to add in a negative 1.272. All right. So we're looking at 4687. I would not use the 4600, 4700. I'm probably going to go back to just the 1,000 point levels here, not the hundreds. But 4687 and 4465. for my downside. All right, I got 5 minutes left. What candidates you want me to look at? Drop them in. Drop them in. Jim said Netanyahu and Trump greeting at 1, private meeting at 2. Two leaders hold press conference at 2:30. Per Times of Israel.com site. Jim, you're awesome. Thank you. Very much appreciated. All right, so let's go look at the SPY. And that was Brenda. And the rain came down. It's the exact picture we just looked at, right? On SPY that it is on the S&P, of course. I mean, they're very similar to each other, okay? We're looking at that 486.60 level. Same thing here. I would add the negative 1.272 and the negative 1.618. Come on. All right. So 469, well, 487 is the first downside, and then 469 from there. On the upside, we're looking at 511 and 525. And once again, 1 2-line move today. 2 standard deviation move. And then QQQ. Let me unscrunch that so we can see the whole thing. All right, good bounce today off of the 100-point level. Right, which is 400-point level there. So same scenario. I've got nothing down below. Well, actually, let's see, 392 and 420. So 28. I've got 26. I need a fibit in here. So let's add a negative 809, which is going to split those two levels in half. Right down the middle. We bounced nicely off of there. So 420 and a half is resistance. 406 and a quarter is support. If it breaks that, 400 is our next support. Yeah, so Alex said, why did I put Google as a fib and Goog as a channel? Google is something I trade regularly. Goog is not. When I'm looking at the pattern, Alex, I don't ever look at the symbol when I pick it. I never want to know who the company is because I don't want to make a judgment of I hate this company, I love this company, and see something I don't want to see. So I don't look at the name at all when I'm picking them out. It's just the pattern I saw when I drew it. All right. So not a lot of candidates asked from you guys today, and I'm not surprised because the market is just that wonderful today to trade. Right. Once again, based on what Jim said, 2:30 meeting, don't count on it being accurate, but 2:30 meeting, you might find some volatility around there to go ahead and pick a good trade, right? So, but caution, right? Go at it with the expectation that it could go against you. If you're trading in this marketplace, listen, if you learn how to trade in this market, there won't be a market you can't trade in. There won't. When it gets easier, it's just that. It's so much easier. But if you can learn to trade this market, you've got it licked. Over 99% of all of the traders out there, right? So never, ever, ever give up on it, right? The opportunity is there. It's just a matter of can you see your way through the muck, right? To come out on the other side. And that's what this is right now. This is just a mess, right? I mean, I've heard of portfolios that were up 100 grand and now they're up 30, right? And 70 grand of profits gone, right? Alex said, learning this market feels like learning to ski on a black diamond. Yep, that's exactly it. It is without a doubt your toughest market to navigate through. Toughest market to navigate through. Right? Excellent. So we'll leave the room open a couple minutes, folks. Make sure to go ahead and get registered for the up and coming The Joke's on You training. Go over to tradinglikeaboss.com, which is where we have all of our free resources up there, folks. There's just tons of great stuff up there. Even to one of them we're going to put up next, we're working on it now, it'll be a downloadable template of TradeStation. It'll be a downloadable template of TOS, what I use on both. And it will not be a downloadable template, but it'll be a screenshot with a listing of all the indicators that I use on Omega charts. I have 2 templates that I use there. So, all right. Everyone have a great rest of your day. God bless. I will see you all at our next update. Be careful out there, folks. Take your time. Oh, darn, I wanted to show this and just spaced on it. Here, this is as of Friday's numbers. The S&P was down 17%. The Dow was down 10. The NASDAQ is down 22. And the RUT 2000 is down 22.5. All right, everybody, I'll leave this up. You guys can take a quick look at it. And the links are in the drop in the box there, in the chat box. Go click on them, and I'll see you at the next one. Bye for now.